Yeah, I look at the market forces, and as I look forward, Bitcoin's creating a global markets in energy, in money, and in finance that operate across all borders and jurisdictions 24/7, 365, and they're open to everyone to participate. And we look at the global energy market. If you take the latest generation of S19 grade Bitcoin miners, you can generate 1 exahash with 30 megawatts of power. At the current prices, that means that energy is worth 45 to 50 cents a kilowatt hour sold to the Bitcoin energy grid. That compares to 13 cents a kilowatt hour for typical residential use, or 11 cents a kilowatt hour for typical commercial use. You can use that to drive down the cost of electricity everywhere on Earth. You can rescue stranded energy everywhere on Earth. You can commercialize renewable energy anywhere on Earth. And you can actually create safe, clean income in the developing world, wherever you find an energy source, selling the energy at 45 cents an hour, kilowatt hour, which is more than you would get in Manhattan. It's a pretty extraordinary thing. It's never happened before in history. Billions are flowing into this mining sector. And I think that the billions that are flowing in the sector are going to create an incredible global renaissance and disruption in the energy business to the good of the world. The global money market. Bitcoin's creating a global money market. You can actually trade on exchanges in Singapore or Hong Kong. And for a while, the contango gets to 40%. That means 40% is the risk-free overnight rate on Bitcoin money compared to a risk-free overnight rate of like 20 basis points in more regulated markets. The derivatives market, the yield curve development, they're all going to explode on the open exchanges from, the innovators at FTX and Binance and every other exchange on the world. They can all plug into the open Bitcoin network. There are rules, but there are no rulers. Even though you might not be able to capture this 40% contango in Alabama as a hodler, you could just buy the Bitcoin and wait, and then hundreds of billions of dollars of capital will find an exchange run by an appropriate entrepreneur offering the right sort of derivatives in order to build out that yield curve and drive asset appreciation. That's a benefit to everybody on the network. If you own $1 billion worth of real estate in California, nothing that happens in Singapore is going to cause your asset to appreciate. And if you own assets that are highly regulated on certain stock exchanges in certain countries, then no innovation in other countries is going to drive up the value of your asset. This global money market's exploding. Spot liquidity has gone from $1 billion a day to 10 billion a day. Over the course of the last 6 months, the future open interest is exploding, and it's truly disruptive. The third major market is global finance market, and this is Bitcoin-backed payments, credit, insurance, and funds. Big tech is entering this space: PayPal, Venmo, Square, Robinhood. Finance companies, Fidelity, Morgan Stanley, all the major banks. The ones that were skeptical a year or 2 years ago aren't so skeptical anymore. The significance is any finance, insurance, or mutual fund company can 10x the value of their traditional offering by injecting Bitcoin into it. And then any big tech company can become a bank. How explosive is this? Well, I think we'll see 150 new holders this year. I think you'll see $500 billion of assets flow onto the network this year. PayPal, Square, and Coinbase alone have a $500 billion market cap. And if you look at their market cap over the last 12 months, they're all exploding. Morgan Stanley, Goldman Sachs, JP Morgan, Citigroup, Fidelity, Facebook, Apple, Amazon, Google, Microsoft. These are major drivers. Contrast that to the gold market forces. The gold industry continues to market the myth of gold as money, while engaging in activities to elevate the US dollar as money. And they're mining in an expensive, dirty, dangerous fashion. They're using 20 times as much energy as the Bitcoin mining network. And manufacturing, marketing, and selling yellow metal is expensive. The next $1 trillion that's spent on gold mining is going to make gold less valuable. Whereas in the year 2035, 99% of the Bitcoin is done. Bitcoin mining is over. The miners are effectively going to be buying Bitcoin. The stock to flow goes to infinity. The stock to flow goes negative. And all of the money spent on Bitcoin mining is to secure the network, provide billions of people with a better store of value to improve energy efficiency, to make the world a cleaner, better, more efficient place. So the market force, I think, clearly favors Bitcoin.